So you all can see my screen? Cool, perfect. So, all right, the question was about stop losses. Let me keep this chat up as well so I can make sure I'm not missing anything. Okay, cool, nice. What's up, Myrna? Okay, so the question was about stop losses. Number one, if you're trading, let's say you want to invest in Ethereum, right? So let's take a look at Ethereum. Let's say, now I will say these types of limit orders, they don't really work with crypto. I've tried it on Robinhood, I've tried it on Webull, and it will just pass you, okay? So number one, this does not 100% work on crypto. But if you're on a stock, this will work, a limit order, okay? You want to create, well, okay, they won't even let you do it on here. Okay, so yeah, limit, I mean, you can do it over here. Oh, this is my Roth. Okay, yeah, so you can't even purchase crypto with a Roth. So let me try something else. Let's say Apple, okay? So let's say you're like, oh, Apple's going to break 145 and I want to see it go. Okay. Number one, I would not recommend doing that. I mean, if it does break over 145, sure, it can run, but right now we don't know.
Okay.
All right.
I love you too.
You can mute. Let me see. Okay. Let me mute you. Okay. So if Apple were to break over 145 right now, obviously, historically, we don't know where it could go. It could just run higher. Okay. But in terms of stop losses and stuff, let's say I wanted a risk-free trade for Apple going above 145. I could come in here and say, okay, right now, Apple is at 145.11, which is actually a good sign. This thing might just keep running, but I don't like these kind of trades because you don't know where it's going. But in terms of the stop loss and limit orders, this is how you can trade, walk away, and do risk-free almost, right? So I would come in here and I'd say, all right, I want to buy Apple if it breaks over 145.18, because you're saying at this price, I believe that if Apple heads this way, that it's going to keep going. Right. So you're saying that I only want to buy Apple after it's broken over some level. And at that point, I want to ride it up. Right. And so you're saying, OK, now, obviously, 100 shares is quite a bit. That's like $145,000 or no, 1,400. I mean, 14,000, excuse me. So 14,000 for the 100 shares, right? So you're saying I want to buy 100 shares at $145.18. Okay. Now, right now, the price is at 145. That was the close. Now, pre-market or aftermarket, excuse me, the price dropped. So technically, you could buy it lower if you want it. But your idea here is that you don't want to buy it low, because if you buy it low, it could keep dropping and you're just like, just let it drop. But if it breaks over 145 and starts running, you're like, okay, I want to get in on this trade because I believe that now that we've shown that we can break over this price, I want to ride it. Okay. So number one, you would say on a time to enforce, you want to say good till cancel. Okay. GTC. If you do a day, that means that you're only expecting this to happen today. That means that by the end of the day of trading, this order will be canceled. Okay. So you're like, you also want extended hours. Yes, because that means that if this price actually happens in extended hours, it will still buy it for you. Now, the thing about extended hours is in extended hours, you can hit some abnormal prices that will not hold up during the day. I think, there was one trade, Alibaba, before market, it had hit 217, but it had only opened at 215 and then dropped to 209. Right. So you wouldn't want this order to necessarily trigger in the extended hours for something that you're buying above the price. Okay. Because sometimes that price can be hit and then it'll fall from there. But let's say you did it. You said, yes, I want extended hours and I want good to cancel this. So this order will sit here until you cancel it. Okay. Now, stop loss. That's in Webull. Now I'm working in Webull. This is also available in Robinhood. And I can actually show you on Robinhood. I can do a screen share from my phone to show you Robinhood. You would come in here and say, okay, I bought it at 145, but I only want to lose a certain percent, right? So I say like 12% is too much, okay? But that's with options. When I said that 12%, that was more with options. I would never give a stock 12%, okay? Because at 12%, I'm losing quite a bit of money, right? So honestly, on an actual stock, I'm giving you like 2 or 3%, right? Because like 2 or 3% kind of day, you're going to 5, you're going to 10, like you're going to keep dropping. You're just not going to stop at 2 or 3%. Like I got a bad entry. But number one, for something like this, you don't want to lose much. So you can come in here and say, I'm only willing to risk 2% loss on this particular trade. And it will literally say, okay, cool. We'll sell your shares at 142 if it doesn't go in your direction, right? So even if you wanted to be like, hey, all right, I just invested $14,000. I honestly only want to lose, let's say you're only giving this thing $1 room for error, right? And you can only lose $118. It just depends on what you're really looking to do with the stop loss. I also do them with options. I can show you all that on the mobile as well, because you can really trade the options with the stop loss as well. But if you want like riskless trading, let's say, all right, let's show something that actually is viable right now. So I go to my screeners, okay?
Can I ask
So
a
I
question?
yeah, go ahead.
Why with options you take that significantly bigger risk? You go to 12%.
Because they move at a greater risk, right? So a stock, and this is a perfect example I'm going to show you, because we learned about this when we kind of went over the options. Notice how Apple only had a 1.31% increase for the day. Okay, Apple literally moved almost $2 in a day with a 1.3% increase. But look at how much these people gained on their options, and that's even more, right? There's more gains in this, because at a certain point this may have been lower, right? So when the market actually opened up, well, it didn't drop but for a second. So for 1 second, those calls may have been negative 10% or negative 20, and then Apple went up 1.3%, and these folks got 40%. Okay, so when I say that I'm giving my stock 1 to 2% range, well, I'm only giving this 10, right? Because you can see the difference in margin in the exponential growth that you can have when trading options, right? And that makes it even riskier, but with higher risk, there is higher reward, right? Like if you bet it against Apple, you lost almost half of your portfolio, right? If not more, depending on where you bought it, because it just kept going. It just blew through anybody that bought a put. And I was one of these people. I bought it, I don't want to say I bought it maybe one of these days. And like, what was sad, y'all, I actually I think I bought it like at a point like this, and I made money here. And then like I went ahead and sold them. And then at the end of the day, I came back in and I was like, man, I'm about to buy 6 of these contracts. It's going to go down tomorrow. That thing just blew off. So yeah, I lost all my money right there. But you learn from these mistakes, and I should have known. I even went over it in the class and I said, look, we're at a high, but that's not to say that people don't want it to go back to its all-time high of 145. And you can see that, like, people like doing that kind of stuff. Like, oh, we didn't hit it today. Cool. We'll do it again. Boom. Right. So if Apple breaks over this 145 and you want to, I'm not recommending this at all, but if you were just like, I want risk-free trading on Apple, you would say, okay, cool, buy me here, but cut me out if that joker turns around, right? And you can just, boom, place the order and it's set. And let's say you're saying that, well, I only believe Apple will go to 150. Well, you can put in 150 right there, and it'll say, hey, cool, well, you'll make $473 effortlessly, okay? Because when we hit your limit price, I'm gonna sell for you. So you can say that, okay, if it goes down $1, cut me off. But if we go up, sell my shares, because I know at 150, we turning around, right? Or you could even say 149.50. Don't put any weird numbers in here because it won't sell. Like if you came in here and was like 149.22, somebody has to be typing this in, okay? I don't think anybody in their right mind would ever type this number. and neither should you, right? So when you're doing this, think about psychological sort of resistances and support, or just even numbers. Like, don't try to make your limit price weird. Your stop price can be weird. It can be 144.57 because all it's going to do is just trigger order just a release. It's like a parachute. It's like, okay, we're here. I need to get ready to get release, right? Because this stop price is just saying that at this price, let me go, get me out of here, just sell it. This price is saying that when it reaches this price, we're going to sell it at this price. But if nobody's got this order in, then I can't sell a 140.92 if nobody's got this price type. So make sure, maybe go for something like 149.50 or maybe even 150, just
Why does that
whatever
need to
it
be
is.
common? Sorry.
What was that?
Why does that need to be a common price? What do other
Because
people
essentially
need to have it as well as
we're working on an exchange, right? If you put in a price that's not like, it's not somebody's order, right? Here's an order book right here. I don't know if it actually, it kind of clears them out after the market, but you can see the orders in here, okay? And there's prices that are in here. And you don't want to put a price that maybe somebody hasn't put an order in for. So you want to protect yourself, especially with options. You don't ever want to do some risky stuff like that. Like, let's say I'm in this 147 trade, my stop loss is going to be at $1. I'm not doing $1.05. I'm not doing $1.03. I'm not doing $1.02. I'm doing $1. Because if this thing moves 6 cents in that premium, I at least wanted to get out of there. But if it moves 6 cents and just completely passes me, I don't have any sort of guarantee that, it's going to catch me. But there's this range right here between the add and asking the bid. And at some point, this bid is going to become $1, which will activate my order. Now, this number will most likely be $1.02 or $1.03, but I'm still in a range where my order would be bought. Okay. But if you put let's say $1.07, number one, it won't let you do that. Like if you're setting a stop price on this, it has to be below the bid. Okay. Now, if you put $1.05, it will instantly activate your order because this bid will drop a penny and it'll be like, cool, I'll take that. Right. But if I put $1, I still have that 6 cents that way. Maybe it'll go down to $1.01 or $1 even, and then shoot back up. Right. So with your stop losses, always just give yourself room. With stocks, you can give it, even higher percentages. You can do 10 to 12% if you want on the stocks, but I don't believe you have to wait that long before you realize this is a bad idea. Okay, because if this is just a 1% move, right? Well, this is all the room I'm willing to give it to come back to these. Let me get rid of the Bollinger Bands here. Right. So if something's going to take off, I'm only willing to give it room to come under or to these short-term EMAs. And so, Thomas, this will be something that on those earlier videos you can watch, and we can either go under individually just over EMAs and moving averages, basically. So notice how it respects this line. This blue one is going to be your 50. Okay. And we're looking at an hour. So this is a shorter time interval. But still, I've got my super trend on as well. The super trend is this green line. But if I remove the super trend, you all can see that the blue line here is my 50-day EMA. Okay, and you can see how it is supporting this as it goes on this up trend. Okay, so let's say hypothetically you did want to get in this trade and you think that Apple can continue on this trend. Well, this is going to be your stop loss essentially, right? Because if we cannot hold that line, then we're going to come down from there. But so long as this is being supported by this line, then we have, at least confidence in knowing that you've got a strong uptrend from here. But as soon as this line starts to turn down, or even the price starts to come towards it, and combination of these indicators as well, you're looking for that sign of a reversal. But like I said, if you wanted to enter this trade and you're expecting for a breakout above this resistance, then you at least want this to be your stop loss area. Okay, you want this to be the area where you're saying that this is as long as I'm willing to stay here until this gets sour. Because if you go down from here, then you're going to be looking at more long term. Because look how far it is from on the day. right? So this isn't a trade I would necessarily enter now because it is at all-time highs. Like the last time it was up here, it came down. Last time it was even close here, it came down. So now that we're here, we've proved a point, we're at 145. If we send it above this, then they truly are trying to send it to 150, and that will probably be the next psychological resistance, okay? So when you look at it in terms of the stop losses and everything, you're looking at those in order to protect whatever investment you're in. Because the biggest way for me, and the reason why I don't trade options in Robinhood is because it only allows you 3-day trades in terms of whether you're a beginner trader stocks or you're beginning trading options and you need a safety belt, right? Well, in Robinhood, what ruined it at first was that I wasn't able to really, once you get stuck in a trade, you accept that loss. There's no way to prevent that loss. You ride it out. And so it helped me understand the importance of stop losses and not just having a mental stop loss. I remember one of the students, Kim, was saying that she uses mental stop losses, and that's extremely dangerous because, well, if in the middle of the day, Jay Powell starts talking or Elon Musk tweets or whatever it is, depending on what market you're in and what you're trading and what sector, it could be extremely detrimental to you, or it could be in your favor and you're not even there to take the profits. Because a lot of times too, like I said, you can set yourself a take profit. And so you can always say, well, at a certain price, I want to sell, 150 shares if it goes here, or let's say you bought 200 shares. Okay. You could say that if I fall here, sell 100 shares, right? And if I fall here, then cut me out or something, right? Or you could say, cool, if you fall all the way down here, I want to buy more shares. Okay. So if you fall all the way with 141, I want to buy more of you. Okay. So you can come in and set these orders to say that, well, down here, I'm comfortable with buying you. So if you come here, I'll buy you and ride you back here. Right. So just depending on where you're trading, and this is not a recommendation for Apple at all. I'm just using this as an example for the stop losses and everything. But essentially the stop losses are there to protect you. And on the options,
can I ask a quick question?
Yeah, go ahead.
So you should put your stop loss always right underneath your buying price, no? Like a cent underneath.
Not always, and not a cent, right? It depends on how it moves. Okay, so let's take Baba for instance. This was something that I was trading. Okay, so for my Baba, my shares are actually up here at 208. Okay, now when it fell and broke my shares and my shares went negative, was I afraid? No, because I'm like, okay, worst case scenario, we've been here before. Okay, so I was like, worst case, we go to 204. And when we didn't even stop there. Like it was like we were at my price, and then the next day we opened so low that I was down on my calls and extremely down on my shares. So you know what I did? I came in and bought more. I bought more shares and I bought even more calls. And then the next day, look at what happened, right? I got all that money back, all that money. This day was just such a blessing because honestly, by the time I had gotten to 198, I was exhausted financially. Like I literally put everything I had left into getting my money back. And yeah, I got it back the next day. It was such a blessing because honestly, I just checked out. I didn't even look at the account. And I remember, a couple people had sent me their profits on JD and Baba. And I had been trading Baba in another account, but I was so bad in my Robinhood that I just like coughed it up. I was like, man, this is a loss. So I just went over to my Webull and bought more contracts and won on those over here. But I thought I was so bad on these that there was no coming back. But I saw people started posting profits on JD. And I opened up my Robinhood and I got my money back. So that's the beautiful thing about options. Sometimes when they go worthless, just hold on to them or buy more, right? I bought contracts at like 60 cents, but I only bought 2 of them, right? And completely lost $120. Okay. Well, I had lost like actually like, I think I was only down to like 30 or 40 left of that. So what I did was the contracts had gotten down to like 9 cents or 10 cents. So I went and bought 3 more contracts. So I literally paid $30 to make all my money back in that the loss that I had plus some, right? So just because of it bouncing back. So when you're setting your stop loss, if you set it $1 or 2 under, like you can get stopped out. But when you get stopped out of that, make sure you're looking at like, okay, well, if I thought this was a good idea to buy and I just got stopped out of this trade, we're only getting at a better entry for me to really catapult from here, because the next day it did 3%, right? And that 3% is major for anybody trading options. Now those options expired on that day, but still, look at these returns. And what's crazy is these numbers even started lower because of where we had actually closed the day before. So, you know, a 3% day got people 60 to 52% gains, right? And what's crazy is on things like JD, I got over 300% return on JD. All right. So if you look at JD, it did the same thing. Like, I think my shares are actually lower on here though. Like I really bought JD back here, but same thing. It was at a level where I'm looking at Baba in this zone. Next day, both of them drop, right? And so JD, I came and looked at JD and noticed that it was really back on the playing field, right? This wasn't even where it was supposed to stop. It just literally came back to this level of support. And once it's there, I was like, this is a no-brainer. I'm buying calls here. And then the next day, boom, it jumps up 3.7%. And these calls, look at these. This was us. This was us. Yeah, I was up 300% because I was already down on one side. Like I was down in another account, bought more contracts, then went and got in another account and started fresh. And I was like, well, dang, if that account's losing money and the premium is cheaper, heck, I'll come in here and buy a whole bunch of these contracts for 10 cents, 15 cents, whatever, and I'll just run it up. Right. And that's essentially what happened here on anybody that was holding the contracts from JD.
So
Or even,
excuse me, question.
yeah.
Very much a noob question. Likely, how is the in the middle down on in the strike column? It says JD 73 plus 2.6% plus 3.7.
Yeah.
That's like the share.
Yes,
increase?
this is the actual stock price. So this is the
Actual
same
stock, yeah.
information you'll see here.
So
it's
how does it
really-
pertain or relate to that 144% that you were so happy about?
So that's what breaks down into, so we talked about that last week. Let me actually open up the graphs on the mobile. So right here, what you're looking at is, all right, let me break it down on a day so you can see what actually happened. All right. So for this particular contracts, right, the reason why they shot up in value, let me turn these notifications off. Stop that. Mute this group. Let's mute them. Okay. Cool. So when you're looking at these contracts, the reason why these got 140% is because one, this 73.50 started out lower in the day. Okay. So one, the contracts were already in a good direction, right? They were bouncing back from this area. All right. So they hit this level of support, which is my blue line. So basically we can see that 70 is a bit of a resistance for JD. Right. So when JD came down, hit this line, I'm all gas, no brakes. Right. And I was really probably in here, lost this money, woke up down, came into another account and was like, cool. All right. Well, I bought here and I was comfortable here. I'm even more comfortable here. So I really leveraged myself in positions here because I was like, if we're at 70, this is like a psychological resistance. This is like, okay, 72 may not stop us. And that's why I said some of these weird numbers are not good to trade, because if you can see that historically that they're going to bounce back to these types of areas, right? Like, so this 70 has been a range, right? So here we broke through it, came back to it, created sort of a foundation right here, and then took off again, came back to it. And this is showing as an area of support. So essentially, These are the types of things you want to look for in when you're trading, especially when you're considering stop losses. Okay. So if I enter this option trade as a call or even as a share owner, okay, if I buy here with shares, I'm gonna give it some room. I'm gonna let my shares fall and I'll just buy more at 65, right? If I'm not heavily leveraged, like if I have 10 to 100 shares, I'm selling some. I'm not going down per dollar, because you got to think about the amount of shares that you have ultimately depends on how soon you need to be letting go of leverage, right? Because if I only own one share, okay, cool, take me down $4 and I'm gonna buy 10 shares. Okay. But if I own 10 shares, for every dollar this thing moves down, I'm losing $10. Okay. So from 69 to 5 or 65 or 70, essentially, like if I bought at 70 and it drops to 65, I've lost $50 just by not even protecting my investment. But essentially, I'm not really worried about $50. But if you want to protect it, you can do that. But if you got 100 shares, that's $500 down. Okay, so you got to think about when you're setting your stop loss, that's essentially what you need to consider, because I'm not always setting stop losses, right? Like if I go buy a $30 contract, I'm not setting a stop loss. Okay, now if I buy a $500 contract, I'm setting a stop loss. Okay, so if I buy this contract right here, I'm going to set a stop loss maybe at $1. So I only lose $30 on this trade, but if it goes in my direction, then I have an exponential amount of money to gain from this. Okay. Now, if I go out of the money and I buy one of these cheap contracts, maybe let's say for some reason I wanted this 76 strike price. I would buy this and I wouldn't even put a stop loss on it. I'm not worried about losing $50. If I lose that $50 and I truly felt like I needed to buy it, well, I'm just going to probably spend another 50 to buy 5 contracts at 10 cents, right? And that's essentially what I did with JD, right? I bought a 73 contract. My contract was 73, but at the time, JD had fallen to 70 or 69, right? So I went in and bought this, say it was sitting maybe up here somewhere, because I paid about 60 cents for it. Okay. Well, then it fell even more, which made it like 30 and 20 cents. And then it drastically fell because it was a weekly contract and it was coming to expiration. So I bought it at 60. The next day it was like 30. And then I was like, I'm fine, it'll turn around. And then it became like 15 cents. And at that point I was just like, I'm not going to sell my option contracts for 15 cents. I'm not just about to sell my contracts to get $15. Like if anything, I'm about to put another 60 in here to buy 4 of these contracts for 15 cents. Right. So that's essentially what I did to get my 300%, because I had to buy when this thing was low and then it shot me back up. So essentially it was probably down like these were at the beginning of the day. And then literally I was able to get not only that 50%, but plus whatever he was able to give me in these returns as well. So it's all about timing with options and in stocks, and your stop loss is going to be based on what you're looking at on the chart. Like you should not, number one reason why you just wouldn't buy here, right, is because like you would have to give your stop loss so much room, because where would you stop, right? Well, you don't want to stop out here, because if I stop out here, it could turn back around. And then you're like one of those people that bought here, lost money. You thought it was going to keep going. You sold, but then it turned back around. Right. So essentially you want to keep up with this type of thing, because the stop loss is only there to protect you from something that could potentially go bad. Okay. You don't want the stop loss there on every trade, because if you're already making a bad entry, what's the point of the stop loss? Like at that point, it's just going to compound losses, because I started to think that you could lose stop losses just to get in any trades, right? But what you don't want to do is to continue to get stopped out, and then you're just losing money, right? So essentially you do want to give your stop some room. So if I enter a trade here, I'll put my stop down here, right? Because I'm like, well, dang, this is where I believe the bottom to be. So if you fall below here, I need to assess whether I want to get some more out of here or wait for this, right? Because you can see what happened. Like even when it bounced back here, all right, cool, let me out. Because if you want to fall here, that's a lot of money in options. Okay, so if this went up 3% and these folks lost 60%, imagine what going down 5.92% in a day would be for your option contract. if you're in the wrong direction. So if you bought a call here thinking we were about to bounce back up and you don't have a stop loss set, I guarantee you lost 100% of your contract right here. Right. So this is how people go broke, not setting stop losses, because even when I was in here, with JD, I didn't get stopped out of JD because my option didn't lose that much value in this drop. But with Alibaba, I got stopped out because it had drastically just fallen so many dollars. Right. This went from where I thought was a great entry at 209. It dropped a whole $10. Right. And that's an extreme, that's an extreme drop in an option. And I was literally like, my options had lost almost 80 to 90% of their value in Alibaba. But I got that money back right here because I didn't give up on the trade. Like, I just knew we were at a buying level. Right now, if you go look at, let's open up Tradingview. And this is what I'm just going to kind of show you in terms of like big picture and short term. So if you look at this chart right here, this is a day chart for Alibaba showing a downtrend, right? So that's saying that we could potentially go to 189. So in terms of long contracts, I actually didn't hold them. I just took my profit here. I was like, cool. Now, on a short term, this is a 1 hour, right? So this is a 1 day. This chart is a 1 hour. So you can see that there may be in this bigger downtrend, yes, an opportunity for a reversal, right? So either this is reversing and we're going to turn this around. This little indicator right here is the first sign that we need that this could be turning back around. Or you could literally hit this red here and then keep on reversing. So with the cheat code, it actually comes with stop losses, which is extremely helpful because I do like to enter more in this area. Like once it's past the entry, I'm like, do I want to jump in? You know, I'm very hesitant here, but if I feel confident that this could be a breakout, I'll go ahead and enter here. Especially it depends on the price, right? But cheat code does help you on that. So when you're trading, make sure you're looking at larger time frames and comparing them to smaller ones, because this is a top-down approach. Like even though I see that maybe these Chinese stocks are on a overall downtrend right now, there's still an opportunity for either a reversal or to play it up and down, right? Because I'll play that joker until it wants to run up to whatever. And then maybe it'll go to 210 and reverse, because that's essentially what it did this day. It went up to like 207 and then reverse from there. So like at this point, I was able to get my money and get on out, right? Because I saw that overall, this was a big trend down, but I was like, well, this is the opportunity I was looking for, just to be able to come in for just a 1 or 2 day trade to just scalp this, right? And take advantage of this opportunity. Now, this, like I said, could mean the sign of a reversal, or it could just mean this is saying that, oh, and then we're going to go on down here, right?
Oh, cheat code with the blue entry thing is telling or advising you get in here, buy here.
Correct. So essentially,
and put your stop loss and on the SL thing.
Yes. So this is your stop loss. This is your entry. Yeah. These were take profit levels. Okay.
But stop loss I see was before the entry or what?
Yes. Because your stop loss is protecting you. So like let's say you wanting to buy Alibaba. Okay. So you're going to say, hey, I want to buy Alibaba at 204 with the hopes that we can go back to this 230. Okay. Because just a few days ago, click on this, we were just there, right? I mean, what, like a week or two ago.
So, and that makes you think it can go back because you were there? You were just there?
Essentially, that's what you want, right? If these are good companies like that, that's what you want, right? Because I mean, look at the market as a whole. So with the stock market, when it crashed over the pandemic, right? Nobody probably, I mean, I don't think nobody thought it was going to come back, but it still does. It's going to come back, you know? So anything that goes down, this is an opportunity to buy. Now, there are some things like Hertz that just went down and didn't come back, right? But I'm not trading Hertz. You know, I'm not looking for companies that I don't believe will bring back their value. So that's essentially number one you need to be doing. Like a lot of people may just go buy things that fail, but they might be in the medical industry or pharmaceuticals or something like that, where there's no more cash for research and development, right? So you just literally bought a stomp, like just something that's just going to sit there and it's just losing value. But you're like, it's going to come back one day. But even like AMC, take AMC, for example. I remember when AMC dropped to $3. And I was just thinking, man, like I should just buy this just cause. And I remember telling people to do it because I was like, man, this is the world's largest cinema, and it just dropped to $3. And it was like I honestly was just like, yo, this is a no-brainer. I was like, I remember that, it was higher than that. So I was like, even if you just buy it at $3, what's the worst that can happen? And y'all, that thing dropped, it freaking shot up to $20. Like I had never, and this was still in the brink of my like come up, like, cause I lost a lot of money in September. September was just really bad. Lost a lot of money in September. And then November, I started to come back as I learned options to get that money back. And then all this stuff started coming on sale. Like after I won all this money, I got all this money. So I was like, man, I'm just going to buy AMC for $3. And I bought it here. And not even a week or so later, boom, I woke up one morning, that thing dropped, it shot up to $20. And this $20 happened in like after hours too. So literally you had to have Webull in order to, or something that allows extended hours to even trade this. So yeah, I sold my shares at like 20. I want to say I got like, I don't know, right over 24, because
Awesome.
everybody was like, man, you
Wh-
want
Which platform allows for extended hours?
Webull, Webull, Robinhood does not. Robinhood literally only allows people to trade from 8 a.m. Central to about 5 p.m. Central is, I think, like the latest you can like put in an order that will actually like sell or buy. Let me check this chat really quick, make sure I'm not. What are your thoughts on space? Oh yeah, we can talk about space.
And what are your thoughts on TD Ameritrade?
TD Ameritrade is definitely for a little more advanced. I don't have a TD Ameritrade. I just think it asks too many questions for me to buy. I really just like to come in here. I do market orders if I'm buying shares, right? So if I'm just buying, I don't even do limit orders anymore. I'm just like, I know this is going to go up. If you go down, I'll buy more. So I don't even do limit orders. But if you're new to trading and you're really trying to maximize your profit, I remember when I first started trading, I was trading Sundial because I would just buy it every time it came down to 25 cents, right? So there was this time where literally it would go up and then come back to 25, and it would go up and then come back to 25. So every time it went to 25, I would have orders in to buy it and then sell it at like 90 cents because it would keep doing these runs almost to $1 and then come back. Runs almost to $1, come back. So every time it came to 25 cents or 50 cents or anywhere in that range, I bought it. And then one day, Nokia, Naked, Sundial, all of these just AMC, everything just started to take off. And I was holding all this stuff. So this was probably where most of my gains recently came from, just in terms of capital, be able to trade larger options, was from these trades, just planting seeds when things were low, right? Because like, to me, it's like, weed was one of those things where I was like, yo, this is like, I'll put money here, right? And then I just,
Anymore?
what did you say? So let's take a look at space. Some time. Space, the only thing I can say about space, you should have just bought it when it dipped. Because I remember when space broke this 20, because I actually owned ARKK or ARKX and space stock, but I had a stop loss at 20 because I knew that if it fell below 20, it was gone. And once it broke this line, I was out. And then it went to 13. It was like $13 at one point. I want to say it dropped to that point. $14, but I believe it went actually $13 in a day. And I was like, man, this might be one of them AMC things where I just need to buy it. But I was like, man, $13, like, I ain't gonna buy it. And then, so essentially, yes, we want to look for opportunities like this, right? Because you want to buy low and sell high, right? You don't want to like come in and be like, oh, I heard space is taking off. Like, yeah, you might be able to get this run, but what if it gotten rejected here and just turned back around? Like, even like, what if you would have been one of these people that was like, man, space is a new thing, and you're coming in and buying, and then it completely tanks, right? So essentially, we want to be looking for opportunities like this. But my take on space, there's only one theory that proves to be true here is buy the rumor, sell the news. Okay. They have made it to space, and I feel like this is going to be the same trajectory of their rocket, right? Space is right here, and then they got to come back down to Earth. But is not that's not to say that these little meme stocks won't just like take off, but you can see that this is the first red day. Okay, it did -6% in its first day. The real true telltale is going to happen in the pre-market, right? So if in pre-market we can see it going down, then it could potentially come back up. So you see this right here, and that's why I always try to tell you all pay attention to the pre-market. And I didn't even have to see this to see that. If I open down and I'm looking for a call, this is my perfect setup, right? But be careful, because some stocks, you got to understand, if you're it's not like this for all things. It's just like the thing you're looking for, right? Like if you're like, I'm looking for a call and it opens down, then this is better for you, right? Because your call position just became cheaper. So this becomes exponentially more bullish, because heck, any bit of low you were going to get, we already got that out of the way, and we weren't even trading options right here. Okay. So that's why I like being lower. I don't like being like, if this were to take off, I don't want to buy no call here, because when the market opens, that call is going to be more expensive than I wanted it to be. Right. And now I have to push even harder. But if we lost some steam in the pre-market, oh, cool. Because as soon as this market opens, that thing is going to be cheaper than I initially even wanted it to be. Because essentially I was okay with this. I'm not speaking in terms of I was trading this. I'm just saying, if you come in here and you're looking at this and you're like, I'm cool with buying an option, I feel like this go up. Well, if it goes down, you should be even more confident, because you're like, well, dang, that's a good sign. Because if you open and the VWAP is in your favor, it's all gas, no brakes. Just make sure you're also watching other things in the sector, like if there's a space ETF or whatever you're trading, make sure you're looking at all things. But in terms of, could this keep going? You got to look at the pre-market on this one. And how I'm going to trade it is probably just wait on a put, because if I know that this 58 area is where we've seen some resistance, right? Because we've been here before, not only recently, but in the distant past. Okay, so it's not strange for it to try to go to 60 or 62, right? That's not abnormal. Okay, because we've been here. Even the fact that we had this extremely 38% day right here, that was not out of the ordinary. The reason why this line was here, because we had that resistance here. All right, so we broke over that, and where we came back to was right here, right? Before it really broke back down into this range. All right. And so this is another area where you're just like, it's a $40, right? This is $60 up here, $40 right here, $20 here. You can find these types of ranges. I mean, obviously it's a $20 range, and that's exactly what it did in one day. It did $15 in one day. $15. You can see this right here. So literally it went from the bottom of this range and said, cool, we're going to tap out. Right. So if as soon as you saw it going towards this, and see, I wasn't keeping up with any flight schedules of space and all that, so I wasn't keeping up with that. Had I known they had a flight planned, I would have bought back here. I can't keep up with everything. I remember you asked me earlier, how do I keep up with what I'm going to trade? Watch list. And I had actually taken space off of my watch list, because it was doing some trash stuff. Like when it broke that 20, I took it off, but once it broke back over 20, I added it back. But this is my watch list. I trade these. Some of them I don't trade, like Fisker, I don't trade, ChargePoint, I don't trade, Plug, I don't trade, but I just like to see them because it lets me know what sectors are down. Like if these are down, energy ETFs or energy and electric vehicles are down and stuff like Mara, Riot. These are my crypto stocks. So if I personally, now at this point, if I want to short like Bitcoin or something, I'll come after MSTR, right? Because crypto options are extremely expensive, but also you have to exchange Ethereum. Like I would have to go through the process of getting a wallet, buying Ethereum, exchanging the Ethereum for the currency of whatever platform I'm using in order to trade the options. And it's just, okay, I'm just have to come trade this, right? So if you want to trade options and really make some money in terms of how Bitcoin moves, you're going to go trade MSTR. If you don't have this kind of money to trade. Now, on Wednesdays and Thursdays, these prices get a lot lower. And I trade it then. Like if I come in on a Thursday and I feel like Bitcoin is going to go one way or the other, these contracts may be like $600, $700, $800. And I don't mind paying that, because one time I bought one of these contracts, bought it at the bid. It gave me $50 as soon as I bought it. So I was up $50 on the trade and then like made $400 because it was moving in my direction, right? And I made $400 within, I'd say about, it might have been 10 minutes. I was about to say 2 to 3 minutes, but this might have been 10 minutes because I had to wait on Bitcoin to kind of really roll around. And, but I bought it at the bid. And this is another thing is like, when the spreads are this large, look at this. This is a $200 spread. Number one, this is extremely dangerous. That means that there's a $200 spread. So you can either buy this for $2,200 or you can buy it for $2,400. But if you buy it for $2,400, you could potentially be down immediately $200 if the price of the premium becomes 22 now, right? So be very careful when you see spreads like this. This is actually like extremely dangerous. I don't like this. But Riot, Mara, you're going to look at those. My watch list isn't crazy long. A lot of these I actually invested in too, so it is getting a little longer than it used to be, because I used to just have about 10 to 15 stocks I would keep in here. But I'm invested in quite a few of these, like Coin I'm holding, JD I'm holding, Twitter I hold, because Twitter fell off. Twitter fell off and I bought this dip heavy. Look at that. I was like, Twitter for $40, I don't even care. I really don't even care what happens from here, because if you fall any further, we're so beyond this, the 200 EMA when that happened, that I was like, this is great. This Twitter's going to be here. So is Facebook, so is all this. Oh, let me show you what happened with Snap. So I'm going to show you all what happened with Snap and why I should have traded it, but I also saw it happening. So another thing, bar chart. This is my procedure when I'm really trying to actively trade options. I haven't been doing it as much lately in terms of options because I've really been investing. But in terms of options, I came here and Snap was on here. Let's get this little thing out of the way. Now for Snap, look at this. Look at that. Look at that. I told y'all, when y'all start to see high put call ratios like this, that means that the market is heavily betting against this. Now with stocks like Tesla, you may see this more common because everybody's trying to bet against Tesla. But when it goes over 1, that means that some folks, these folks got to let go, because you betting against a good company. Okay. I don't care what even with Tesla, I don't care what the balance sheet looks like. That's why I don't trade off fundamentals. I don't care. I care about technicals, because that's what traders are looking at. These are people that are extremely reckless with their money and they don't even look at balance sheets. That's me. Okay. But we're making money based on what everybody else is looking at, right? I feel like probably 70 to 80% of the market is completely financially illiterate when it comes to fundamentals. But those same people, probably about 50 to 60% of them, are actually making money without knowing that information, right? So in the case of Snap, I was like, whoa, because usually you want to look for the lowest, because the lowest just means that you have less people betting against you, right? So snow, Apple is relatively low for Apple for sure, because usually this is sitting around 30 or 40. When it gets up to the 50s or 60s, people are betting against it. But in the case of Snap, all right, I saw, whoa, this is high. So I'm like, hold on, let me dissect this. So I told you, when you click on the actual stock, it'll drop you into, okay, what are you trying to sell? Close. Okay, it'll drop you into the, like, I don't know what it's a page about the stock. You can come read whatever you want, but the essential here is that we want to see the put call ratio. All right, I hope they still have last week's. Yep. Look at where all that leverage was. It was on Friday, right? So if you got the majority, because look at these people they're not betting against the future of Snap. They're betting against the right now of Snap. Okay. So I noticed it all like, well, dang, if the put call ratio is 1.22 and the majority of that is right now, these people got to let go. You got to let go. Right. So let me actually go back to that page, because I don't really look at this. I don't dive deeper into this, because then you're just looking at a whole list of strike prices and stuff. But if you want to find your strike price within an expiration, by all means, click on this. Well, just for the purpose of me saying that, I'll click on that. But you can come in here and see what the volume is, what the open interest is. Like I said, open interest is how many contracts are held at the open, right? So these are people still on your team. Volume is how much transactions went on for the day. It doesn't tell you if they were sold, bought. It doesn't tell you any of that. It just says this amount of contracts were exchanged constantly, right? So 2,000 of this 4,000 could have been selling while the other half was buying, right? So majority of the times you do want to look for larger volumes when you're looking for a strike price. Okay. So in the case of this, let's go back to what I saw. When I came in on Thursday night, I told y'all Thursday nights is the night. Okay. Thursday night is the night for these kind of searches. Okay. It doesn't really work for other days because they have an entire week to do whatever they want with the price of the stock. So like if you come in and try to do this on a Tuesday or Wednesday, it may not work for you because the week isn't over. So everybody that has a put, they could be still waiting. They're not forced to sell. But on Thursday night, when this becomes one day till expiration, they don't have a choice but to let go. The stock has gone down. We go take a look at Snap. Okay. So I just kept getting alerts for Snap, and I was like, what's going on with Snap lately? And this is what happened. So for the first part of the week, it just negative 5.6%, right? Boom, drop. The next day completely bottomed, another 5%. Okay. So at this point, we're back to our 50. Okay. Notice this is the 20 that's on the Bollinger Band. So if I remove the Bollinger Bands, that removes my 20 EMA or my 20 MA. But the 20 MA is essentially still a supporting line. Okay. So if I were to just look at the 20, there are alerts for the 20. So if your stock ever does not hold your 20, it's falling, right? So again, there are alerts for the 20. You can go into, click that bell right there and go to smart. And when you're under smart alerts, whatever you want to know, you want to alert when it's trading earnings, you want to alert when it's falling, right? And you can notice that I don't care about anything else. I just want to know when it's falling. Okay. I don't necessarily have to have this one on because that alerts a little too much. And sometimes it's just kind of retracing and then keep going. So I usually suggest just the 20 so it doesn't, bombard your alerts too much. But you can be alerted with your 20 EMA if it crosses it. That means that, hey, if the 20 has been crossed, it's going down, which it came to the 50. And notice again, when you're looking at these, try to find what price moving average your line respects. Obviously, when it's on an uptrend, it respects the short-term 50. When it breaks that, it goes to test the next. Okay. So when it broke this 100, it was really trying to find strength. And what happened here was, like I said, Thursday night, I'm coming in Friday morning and looking at this, knowing that there's 110 put call ratio, okay, or 110 put call ratio, okay. Now, the volume for puts was extremely high in the ratio as well, but also the amount of open interest was extremely high, which means that these people are going to try to take their money because their goal is accomplished. Okay, let's go back to this. So when they came into the market on Thursday or Friday morning, what essentially happened was that for 2 days it went down, right? So everybody that had puts were making money, puts making money. Now, at this point, they're getting scared. All right. And that's why this bar was so large, because anybody that saw that knew this was coming. These people got to let go. All right. The stock just fell, what, $10? What more could you ask for? Right? This stock just fell $10. You guys have got to take some profits. All right. Because now your contracts are expiring. Like I said, they only have 1 day to expiration. So all these people, this 124 open interest, you have got to sell today. You have got to sell today. Or you can exercise your contract. But even if you exercise your contract, you're purchasing shares. You understand? So like when you buy an option contract, you're essentially buying the option to purchase 100 shares at a particular strike price. Okay. So for a put, you're shorting it. You're saying that I'm going to sell this many shares at this price in order to buy them back below down here. Okay. So it's essentially like you're taking the profit as if you bought low and sold high, but you're doing the reverse. You're saying that, well, I'm selling shares I don't have, but I'm going to take this hypothetical profit as it falls. Okay. So you're like taking the reverse of the uptrend. You're making money on the fall of it. And essentially these people have made money. Okay. So you're going to take this money or you're going to lose for the rest of the day, because everybody over here, they already know that, dang, we down, we lost a lot, but I know my contract is going to expire worthless because these people got to let go. So all of these people were going to be on my team, and all of these people had to run with more leverage than me, because they got a lot more to lose than me getting in here. Because at this point, I really entering a trade with Snap here. What do you got to lose? What do you got to lose? It came back to your 50. All right. So if we really using this as support, and I know that this is so much leverage of having to let go right here with all this open interest and volume that got put into that. That was the first sign. I was like, man, Snap is going to go off today, but y'all didn't even trade it. It was one of those things. I noticed it, but I was really focused on getting my money back on JD and Baba. And that's another thing. Don't overwhelm yourself. Don't try to be everywhere, because even if I got into Snap, I'm still trying to figure out how I'm gonna get my money back on JD and Baba. And that's just too much. I don't even understand how people open 6, 7, 8 contracts at a time. I'm literally at most trading 2 different assets. If I'm going, because my thing is, I would rather pay attention to that so that I can trade it effectively, instead of it being like, oh my God, there's a fire over here, put it out. There's a fire over here, put it out. There's a fire over here. And then you just like accepted 3 losses when one of them could have bounced back, but you were just trying to, it was like a sinking ship and you were just trying to patch up holes, right? And one of them could have actually rebounded, or there could have been an opportunity for you to leverage into a winning position, right? So that's my main goal was not trying to take advantage of this trade, but really getting my money back on JD and Baba. I did that with the focus, but you know, that's why I said every Thursday night, you all come in and do this. This is crucial. Every Thursday night, you need to come and look at the most active. So your bar charts isn't going to just pop up like that. So I have it bookmarked. So you're going to go to barchart.com. At barchart.com, you're going to hover over options and go to most active options. When you're in here on Thursday nights, even Friday morning, whichever you prefer, is going to be the same data. When you come in here, you're going to see what is heavily betted against. Okay. And this is going to tell you wherever that high number is, it's going to tell you that there's a lot of people betting against it. Now, like I said, in the case of Tesla, that can still be the case and Tesla will go down, right? Or it can be that case and it'll bounce back. The ultimate decision of whether it's or where it's going to go is you coming in and looking at the day chart and doing this analysis and saying that, okay, where are the fundamentals, right? Because even if you look at the stochastics, like I said, we bottomed out here. We bottomed out here on the stochastics. Our RSI wasn't as low as we wanted to be, nor is our MACD, but in terms of stochastics, we know that this blue line is momentum. If we can have this in our favor, that's at least going to give us enough momentum to go somewhere, right? Now, essentially what this could be doing is it could be getting rejected from this line as well. So it probably just gave us some juice back to get to this 65, and it could just hit this orange line and now just reset that stochastic to go even further down and bring the price with it. Okay, because you notice this MACD just did a death cross right here. Okay, and that's what sent the stock down. That's why I say these fundamentals, and sometimes I think the news is even like coming off of these technicals. Like, I don't feel like the news has anything to do with like them just finding out that information. It's just about the perfect timing for that information. It's like, okay, like the MACD looks like it's about to do a death cross. Let's put out some bad news on Snap. And then Snap goes down, but everybody that doesn't understand this stuff is like, oh man, it was that news that got me down. But it was like, nah, your technicals, like whatever data was in here was giving us that information before we even saw it coming. So once that cross happened, you should have seen this coming, right? And that was even the case with just Bitcoin when it did its dive. You know, if you look at the chart at that, that was what essentially happened even on the actual chart. That's the worst part about what happened with Bitcoin, is that the actual moving averages on the chart crossed. That was the death of this, right? So until these things can curl back up, we're not going to see any sort of resurrection, essentially, you know, because this has to look healthy, right? And this is looking healthy. I mean, at least it's showing quite a bit of support around 30. You can see that it's like it just keeps coming and hitting this. So at any point, it could start breaking out back towards this area, but it's really going to need to start showing some signs to really get up out of here. I was talking about Ethereum because on the weekly chart, Ethereum looks pretty good. You know, we low down here on the stochastics. Now the MACD could give some room. On the daily, it could even give some room. But that weekly is pretty flat. It's like, well, how low can you go? And then on this weekly, you can see that it could come potentially as far as this, but on the daily, you can see that it's been holding this long-term EMA right here. This 200 is holding it. Okay, so, you know, if you're looking for a better price, you know, 2000 would be it. But so long as we're in this range right here, it's safe. But let's say you came in and bought Ethereum. Keep in mind that I said the stop losses usually don't work on crypto. But let's say you came in and bought Ethereum. You could put your stop loss, you know, just a little below here, or you could say, well, heck, if you fall, just buy me more down here, right? It just depends on whatever your strategy is. If you're long-term, you're not necessarily looking to have a stop loss, right? But if you're trading it for a short amount of time, then you might have a take profit at 25, or you might have a stop loss at 2000, right? If you're like, let's say you come in and you're just trying to trade this short term and you drop, you buy one Ethereum for $2,100. Well, all right, cool. I'm gonna put a stop loss in at maybe 1950. So that you come down here, I know that you've passed 1950. We're going ahead and we're going to start testing some of these lows again, right? Because you've broken this long-term EMA, which is not healthy. But as far as for long-term investors, this is a good position to be in, essentially, because we're using this long-term EMA as support. It's been using this, it's been using it, and it's been holding it pretty strong. But like I said, be very wary of this stochastic, because the stochastic is going to tell you the direction for now. And you can see that we're kind of reclaiming these shorter term EMAs because they cross too. When those things cross, we got no choice but to go down, right? So you really can't see a resurrection in things like this until you can start see these short term EMAs cross back over the long. Because when your short crosses the long, you're dead. You're dead, right? Because when this short crossed the 50 crossed the 100, you're dead. When the 50 crossed the 200, you're dead again. You know, so like, and then when you're coming back, you're the instead of the 50 being support, right? The 50 was support while we up, but then when you cross below it, you're resistance. Notice that, right? So we were up, it was support, we broke under it, now it's resistance. We broke over it, it's support, we broke under it, now it's resistance right here. Because this was, it wasn't until we came back here that we were actually trying to break over it, but now it's resistance. And so now that on a short term, we've broken back over it, notice it's now support. Okay. So these are the types of things you want to look for when you're trying to find entry or if something's in your favor. Because if you notice here, we got another death cross, but this is on a 1 hour. So I don't really like the MACD on the short term stuff. I don't really mess with it. I'm really looking at this. Big picture tells me something, and then you go from big picture to smaller to kind of dissect it and break it down. So any questions so far? There was just one thing I want to go before I get going. Any questions? No, cool. Let me show y'all some indexes that I watch. This kind of when you talk about like how do I keep up with stocks, I don't keep up with all of them. I watch ETFs. Okay, this is extremely important because you know, TAN, this is for solar ETFs, right? So I remember there was a time when I saw this was down, so I was like, cool, well, what's in here? Okay, so wait, where's my, oh, I got the screen kind of pulled down. Let me pull this up a little bit. Cool, you click here and you can go under analysis, top 10 holdings, and here's your solar ETF companies. Now, I'm not saying go trade this. This was when it was down here, and I was like, oh man, I need to go buy some of these Sunrun and First Solar and stuff like that when it was down here. Now, that's why I keep touting about travel. So what's a travel ETF? I got it over here somewhere. See, Jets. Jets is this is airlines. Okay, look at where Jets is. Huh. If you don't think I went and bought all these, you like, I don't know what these are. I didn't buy these, but I bought a ton of Allegiant. I bought Spirit. I bought Delta, JetBlue, American. I bought every airline that I take flights on. I went and bought as many shares as it would cost me to go buy a flight from them, because it's like, well, I'm gonna have to buy a flight from you anyway. You about to make your flight about to make me some money now, right? And so I've been up. These have just been kind of just going up because I bought them when they were down here, and the next day the whole market went up 2%. So if the whole ETF went up 2%, so let's take a look at Southwest, for instance. I'm not saying invest in these. I'm just telling you that this is how I find these opportunities. Look at what's happening, right? So I went and bought a ton of Southwest at $50. Next day, I'm up 3%. You know what I'm saying? And that wasn't the only thing I bought, because after that, when I noticed that Jets was down, I was like, man, you know what I did? I did that reverse search. Okay. So I was like, okay, cool. If Jets is holding Southwest, I want to look at Southwest. Now, I want to find out what other ETFs are Southwest in, because if I'm betting on Southwest, I want to see what other ETFs have other stocks that weren't in that ETF that I can go invest in too. So if I'm in Jets, well, what's Harvest? Cool. Well, let me look at Harvest. What's in Harvest? Harvest is down too. I wonder why, because it's travel. Okay. So if one ETF in an industry is down, all the other stocks are going to be down, you know? So then I was like, okay, now I found travel ETFs. Well, what's in here? Okay. Booking. Well, how much booking costs? I was like, okay, booking costs $2,000. I'm about to go open up an account and buy some shares of Booking. If you don't think I didn't go buy Booking for $2,000, you got the game wrong. I'm up like 50 bucks or something like that. It ain't crazy, but I'm still, my money's making money. You know, it's better than my 2,000 sitting in the bank and not making me any money. Right. So I immediately went and bought these shares. I'm already up. And my expectation is take me to 2,400 and beyond. This is long term. This is for my Roth. I'm not even looking at this. We just hit a long term. And unless I'm expecting, I guess, the next pandemic, I don't expect us to break this long term EMA. Okay. Now, if we do, that's why I say the news is connected to this. Because if we see the airlines and all these travel stocks start to break from here, there's some kind of news or catalyst to do that. Because right now, technical traders are looking at this and saying, invest. How do you know you hit a long term with Booking? Because essentially that's where it was, right? Like Like it went there, it came back, it went there, it came back, it went there, it came back. And we keep trying to break over that. And then we finally did, and then it completely came back down to a price that I purchased. Right now, I didn't buy here, I bought over here even lower, a better price. But still, even when that happened, I noticed these kind of trends, right? In the next 2 days, it got that back, came back to this price again, and literally in just a day got that 2% and then drove back towards that. So right now, if the whole entire airlines industry is down, okay, so if we look at jets and travel and all of that, if we know that the whole airlines industry is down and I'm getting emails right now that Europe is back open and they're selling me flights to Spain and Italy and everywhere, and I'm ready to go. If I'm gonna spend the money on the flights, I'm about to spend the money on the industry. We're at all-time, we're not at all-time lows, but we're at long-term moving averages right now, right? So when you look at banks, they are falling down right now, but they're also coming into earnings. So when they were falling down, they hit this 100, because not all things are going to come to your 200. Okay, some of them respect your 100, some of them do the 50. They're all going to cross a 50 though at some point, but maybe they just respect the 100, right? So when you look at banks have earnings coming up this week, and they're about to break over this 100 EMA, and they have room to run, right? So let's look at what the technical, look at the technicals. You know, your MA is reset, your RSI is ready for takeoff to 70, and your stochastic is already telling you I'm pulling you in the right direction. Now, this isn't a trade I'm taking particular. It's just an observation. I noticed that banks had earnings coming up, but let's say you wanted to trade banks earnings and you're looking at XLF, which is the financial sector. You're looking to the holdings. You say, cool, I trade banks. I like trading Bank of America and JP Morgan. I'm not saying I do this, is hypothetical. I do not trade these stocks. I will short Bank of America before I buy a call on it, because I just do that. But okay, Bank of America. One day I've never traded Bank of America, but this one day in my life, and it was around earnings. And I was just like, I'm gonna try to trade this at earnings. And I remember seeing that it would hit 37 and then it would turn around. So I think I did it maybe back here. So I put this line here because I said if it hits 37, I'm buying a put. And that's essentially what happened. I literally, it hit 37. I said, cool, I'm about to put in for the next 2 days. It was just printing. And now I wasn't trading it well enough to know when to get out or whatever. So I just sold. I was just like, cool, I don't expect this to completely tank. But I noticed that 37 was somewhere that it was going to have some resistance to get out of there. Because that was just going to be the next level of, hey, if you can't break this point, then you're coming back down, right? You're going to get exhausted. So I put these lines in here when I was trading, but I don't trade it anymore. But let's say, for instance, these stocks did run up towards earning. This is your resistance right here. And even look at what Bank of America did just outside of the ETF, right? So it came back to that 100 as well, right? So once it comes off that 100, it bounced right out of there. Did 3.25% in the day, which is pretty substantial for options. Yeah, these people did 150, 120, right? So when you ask me, how do I keep up with the market? I'm not scanning all these things, but what I do is I keep it from low to high. So I want to know who did the worst today. Well, this is indexes. I'm gonna watch this. So I'll say who did the worst. And from there, I'll say, okay, it's AMC. Okay, well, no, I wouldn't trade AMC like that. AMC is total speculation. That is just gambling, basically. Let's say some that I would trade falling. Like apps. I really don't trade digital time around like that. I just buy it. But apps happen to show up down here. Okay. So one day I popped open my watch list. Apps was down here saying that it was down for the day. Okay. So what I did was I came in, looked at Digital Turbine. I was like, well, what's going on? Oh my God, it's at the 200 EMA. Buy. I didn't buy any options because there was really I don't like this volume. but it's not a bad idea. You could also come in and buy longer contracts or whatever. But I don't trade contracts on apps. I'm just interested in just buying the shares and getting some profits out of that. So I bought Digital Turbine because it fell. Because I remember when I first started trading in 2020, apps was just like $9 when I first bought it. But it moved so slow. And I was just like, man, I'm just done with this. And then I come back and apps is $60. That's when I knew I had to open up an account that I don't look at, because I remember I just started trading and this was one of the stocks that was making me money. But when it got up to this $20 for my 9, I was just like, man, this moves too slow. I'm out. And had I just held it and just not looked, I would have been up here. So I recommend having multiple accounts where you have one account that may be like a Roth IRA where you just contribute and you can trade in that account as well, and the taxes are deferred. So instead of doing trades in your individual account and doing all this buying and selling and running up your capital gains, you can do that in a Roth IRA for stocks. Now, there's no liquidity without a penalty, obviously, but I'm not looking for liquidity on that cash. This is just as good as a savings, but it's growing for me. And so when you look at things like this, if you are finding it hard to find the right stocks to put in your watch list and you want more opportunities like this, well, you can come in and use the screeners, right? So this is one of this preset. Like I said, I would not recommend using what I have preset because that was when I first learned about these. So I need to actually change my bookmark. But for the most part, this is some good presets right here. Some decent ones. You don't have to have you want the average volume to be over 1 million and you want this current volume. The current volume though, if you open this during the day, this is going to change tremendously what you're looking at. Okay. So be careful about using these volume ones when it's intraday, because obviously if the day just started, we're not going to have 1 million volume. So if you use this, it's not going to show anything and in midday. So I'm usually using this the day after or something like that. So, well, lo and behold, y'all, I haven't even opened this thing up, y'all, and look what's down here. So it's not hard to find what I'm looking at. Okay. And I didn't even use the screener to find these. I have a watch list with indexes. Okay. So like I said, on my watch list, I have what I call indexes, which are essentially just ETFs and indexes. So XLE, energy, cannabis, there's cannabis ones. There's one that's called like THC and Mary or something like that. But XLF is banks, jets, TAN, solar. QQQ is going to be the NASDAQ. SQQ is going to be shorts. VIX is going to be your volatility. Anytime this gets to 19, the market is getting extremely volatile. That means that just like prices are going to be crazy, right? So anytime, you definitely want to keep up with this. Set an alert. I have alerts set to let me know when we getting up close, because if this starts to go up, I'm looking at ways to hedge my portfolio. Okay, because when these start to increase, that means that there's some volatility increasing and I need to be watching out for my money. Okay, because when this starts to go up in the 20s, most likely people are selling or buying the wrong things. Like you get like stocks that'll start climbing and driving this up, because the volatility for those stocks will be going up. Because if you drive AMC up to $60, the volatility of the market just increased because stocks like that shouldn't be at that price. Okay, so when the volatility of the market goes up, you need to be looking at ways to hedge your portfolio. So I always keep alerts on the VIX, because that's going to it's like my first warning sign of like, okay, Houston, we have a problem, right? Like everything is not okay. But as long as this is going down, I don't care, because that means the volatility is going. We're healthy. Nobody's freaking out. But if this increases, it's like a heart rate. It's like when you get too high, we need to bring that down. Okay. You can notice that these little highs are spines. They're just wicks. So it didn't stay up long. It literally stayed up there for part of the day and we brought it back down because we were freaking out. Okay. So keep this on your watch. But this is what helped me find the airlines, because I watched jets, and jets started coming up here consistently as a loss. So I'm watching these industries. So right now the short for the S&P is down because the S&P is climbing higher and higher and higher. Okay. So when I want to watch the market, I just watch ETFs and indexes. But if you don't know where to look, you can always start with screeners, because look at these charts. Okay. So whether you trade travel, or you trade weed, your opportunities are going to be in here. So I think this is Norwegian, United Airlines, Tilray, American Airlines, Carnival Cruise. So your travel is obviously in this position where we're hitting long term. Now, why am I looking at this and why have I seen this? Because like I said, that 50 and that 20 are my short terms that are letting me know that if you are below my 20 and you're below my 50, you are in a better buying position for me. Okay, so I want people to understand why I chose below here. Okay. Now, what gets me in another position of a real nice reversal is RSI being oversold. You don't want this to be too far oversold, because there just may not be that many stocks that far down. Yeah, there's a total of 3 stocks that far, because the market ain't gonna let it go that oversold. Okay, anything that's good, we ain't letting it go to 30. Okay, and if you go to 30, it's like you're wasted, or somebody's gonna come save you at some point, but I'm not interested in that. I want 40, because 40 lets me know that we're getting too close to too far. Okay, that means we're not there yet, but we getting too far. All right, so you can see by what's going on. So when Thomas, you asked, what makes us think it's going to go back here, because that's essentially what it does every time we come to these prices. Okay, so what we're betting on here is essentially the price to go up from here. Now, I can't guarantee that it's going to go up, because the news could see this and be like, hey, it's on long terms. We needed to break that. Okay. And then they could start restricting these cruise lines because of one pandemic or one corona breakout. And then airlines, they don't have enough pilots to fly the plane, so they got to start canceling flights. You never know what could happen. Right. So it could essentially break these long-term EMAs. But for right now, the whole travel industry is sitting on it. I mean, I get, if you went to the next page, you see probably more travel. Love, Southwest. And I don't know too many of this. Is marijuana, OGI. Me and my dad made some money on this. This thing, I don't trade it as much anyway, because one day I just got like 100% on it. And I was like, all right, I'm good. I don't want it anymore. IVR, I keep hearing this. IVR was one of the first companies that I ever invested in, and made some really good money. It's interesting that it's here, because I have been hearing the name come up a lot. It's a real estate mortgage, like basically it's a mortgage capital. There it is, mortgage capital company. Okay, it's a REIT. It's real estate something investment tool or something like that. Don't get me lying on the REITs, but basically, it's essentially the housing market, or mortgages related to it. But I remember I bought it at like $3. The thing ran up to, this was like June and July of 2020. It ran up to like $7. So I'm not sure if people are trying to play that same move here, because I did hear it a couple of times, but that's not me saying, look at it, it's just here. So it's interesting that it is here, but these are how you find these things, these opportunities, because essentially we want to buy low, sell high. We don't want to buy high and sell higher. Okay. And I don't know what Tiger is. I'm not trading Tiger, but, before I go, let me show you all this one last thing, and then I'm done. Next week, we'll go over this app called Options Flow. So for everybody that's new, I want you all to go in and watch the videos for the previous classes, so you all understand options and everything. But if you're using Tradingview, I just learned how to do this, y'all. If you want multiple layouts, you get up to 2 on the free version. I mean, not the free version, but the paid version. I paid $14 a month. You can get the 2 chart layout, which is pretty legit, but that's not what I wanted to show you. Wanted to show you this. Found another screener and how to use it, because this screener is always here, but I didn't know how to use it, and I just wasn't really even looking at it, to be honest. I just thought it was like some really whack stuff. But I noticed this. You can literally screen based on time intervals. So when you're looking at FinViz as a screener, this is a daily chart. Okay. Oh, well, maybe I can move it to intraday. Oh, you gotta upgrade. Okay. Okay. So yeah, the charts are daily. All right. But on TradingView, I can change that. So let's say I want something that's long-term, a strong buy. Okay. So you can say, all right, 1 day, and I want, where are these settings for it? I believe it's right. Filter, no filters right here, filters. Okay, so my filters, you're going to scroll down. You want your volume obviously to be 1 million, because we want to trade high volume stocks. If you ain't got 1 million volume, you're not doing anything. And there are some stocks that I invest in that are under 1 million volume, like Booking. Booking isn't going to have 1 million volume, but I'm not trading the options. I'm investing in the company. Okay, so you want to come in here and you can literally do the ratings, and you can say, hey, I want strong buy on the daily, right? And if you're good at Excel, I saw somebody do the screener. If you're good at Excel, you can pull this out. You can export this data, right? And then compare it to, all right, we know that these are all bullish. Okay, these are all bullish right now. On the daily chart, it's saying that these are all bullish. So you look at NVIDIA, Tesla, Microsoft, Amazon, Apple, Facebook, all the tech companies, basically. Well, then you change this to 1 hour, okay? And you change the rating to strong sell or sell. And if any of these companies that may have been bullish on the daily, but they're bearish on shorter time intervals, could be an opportunity to catch like the pullback, right? So if we know AMD and stocks like that were on the daily for strong buy. That's why I said if you're good at Excel, you can export this and then try to find the matching one, so it'll highlight it for you. So it'd be like, hey, Baba was on bullish daily but bearish short term, and then you be like, okay, I need to go look at the chart for Baba, right? But for instance, you can come in here and you can say, hey, okay, Micron, AMD, even Uber are things that have fallen. So if you're looking for even short-term opportunities, you can do that, right? You can come in here and say, well, what's falling on the hourly? Okay, cool. Let's look at Uber. All right, right. So because I went and bought Uber's competition just based off of this, because I was like, oh, Uber's fell on the hourly. And then I looked at my shares and I was down on my shares. So I was like, cool. Well, I've heard of this app here in Mexico called DD, which is the Uber for like, I mean, it's out of China and I don't know where else in the world they use it, but like Mexicans use it and prefer it over Uber because Uber is like cheap American prices. So maybe I'll pay maybe like $5 or something like that for a ride. But on DD, you can buy a ride for like $2, you know? So, and that's how cheap the rides are here in Mexico, by the way. Like Ubers are no more than maybe like $10. So that's how I found out about DD. And when I opened up DD, it had fell with Uber, which was even better because it's just IPO'd. It shot up and then boom. That's why I don't trade IPOs. And I'm glad I didn't know about this IPO until now. Because I just happened to notice that Uber was on this sale list. Because I was like, man, it was one of them things you just don't have to look at the balance sheet. You're just like, okay, if Uber's down, cool. What's the price, right? And so when you come in, you look at it, and you're saying, oh wow, Uber is below its long-term EMA. That's a buy for me. I want to say I actually bought a call on this too. I feel like I bought a call. I'm not sure. Could have just bought a lot of DD because I definitely made my money back from the loss that I had on the shares. But these are the different ways that I find what I'm looking for, right? So screeners, they're so important. Learn how to use screeners. There's multiple platforms with them. Even Webull has screeners. It's a lot more basic on Webull. Webull is just going to alert you of some stuff. Like, so if you have some settings, let's say you wanted to come in and make a screener, you could do certain things like MACD Golden Cross. You could do oversold. So you can just literally click on this and it'll be like, here's some things that are oversold, right? But make sure that you're looking at the right one market cap, like, because I want companies that are, you know, have a larger market cap as well. And also change this earnings or don't add it at all. Or you could say like, yeah, you could do any, because some companies may not be profitable on their balance sheet, but they're still good stocks to trade, but still super, and you can still do the strong buy and sell ratings and all that good stuff in Webull. So there's different screeners. Like here's a screener that I have, KDJ oversold. You know, it really doesn't give me too much as good sauce as I could get out of here. Yeah, see, none of these are stocks I look at. But sometimes there's some gold that'll pop up in there, but it's constant. It'll constantly update this for me, and it'll do it for me. I don't have to go in there and change anything. It's just like, hey, Ray, there's 8 matches in here. But I like using FinViz preferably because it's a little more like my language, because it's like, oh, I understand RSI, I trade that. Okay, oh, I understand moving averages, I trade those. So when you're looking at this, don't let it seem too advanced. It is super simple when you think about what you're looking for. Okay, we want stocks, or me personally, how I trade reversals. So I prefer stocks to be below these, and I prefer them to be above the 200 because it lets me know that they're either falling to that range or they've come back from under it. Okay, so just for a quick example, I'm just going to show you well, we'll look at CCL Carnival. So if you look at Carnival, like I said, I don't trade this. I did buy some stock though, because I was like, well, what's there to lose? Who cares? But if you look at where it's at, it's below the 200 right now. So essentially, this is me trying to play the whole travel industry coming back from this low. Okay, because this is the first time in a while that we've hit such lows. Since I mean, yeah, I wouldn't even want to go back to this point. I don't think we'll reach these type of areas unless we hit another pandemic. But when you think about how far these cruise stocks still have to come back from, right? I'm all in here. I don't care what happens. This is one of those no look type of just buy and just let it sit. This is for my grandkids and stuff, you know? So yeah, screeners, gotta check out screeners. Anybody got questions after we went over that? Hopefully we still got people. Y'all still in here. Okay, all right, I hear you, I see you. So no questions. Hopefully this was helpful. I know we had kind of really covered a lot of things that we've already covered, but I definitely wanted to show you all how to really use these screeners, especially this one, because you can change the interval. So depending on how you trade, how short term, you can look for these types of opportunities. Because like I said, if you know how to use Excel, you can compare the two and you can come in and you know, change these to strong buy on the daily. And make sure they're in the direction of volume. We want the highest volume first. Yeah, then on strong buys and stuff like that, like I said, you can come in and set these ratings. But that's how you use the screener in here. You can change the intervals. And there's a whole video on the screeners for FinViz as well that we break these down. But yeah, that's essentially how I'm looking at the market and how I'm gauging it. Make sure you keep up with these indexes as well. And you're taking a top-down approach. Like, no, when I trade, I'm looking at so many different intervals. So when people ask me, what's the best time interval to use? I'm looking at them all. Okay, so because I want to know, like, on a very short time frame, like, am I still active? Is this trade still good? Is it in my favor? Okay, cool. Now, on a long term, how are the balls looking? Oh, well, that's extremely bullish. So I ain't scared from here. Okay. So, and then if I'm using this while I'm trading, I have a 1 minute right next to my options. Cause like if I'm ready to buy options and I'm looking for a trade, I'm trying to see like if right now is like the best time, because these options, they move so quick, y'all. And it's like the low price may even last for like a millisecond. So, and I'm literally like, if I'm buying a call, I wanted to go ahead and bottom out for me. So like, let's say you're here and let's say you wanted to catch a continuation. Well, you come in right here and you're like, okay, buy. And then you're like, okay, cool. We good. And you could even, okay, buy more, right? If you're feeling that strong about the trend, right? But yeah, I definitely come in and I use the smaller intervals to find a better entry. On my large day interval, that's me getting ready for a trade. That's me saying that, oh, okay, by the looks of Jets, I need to be looking for some entries here, right? Because we just hit long-term, wow, even on the weekly, it just hit a long-term, right? So this is telling me that essentially it's got to come back because this is a weekly chart, okay? So on a daily, we're already seeing this comeback. We already got 2% of that back. And if we can really claim this 200, well, it's back, back on up for the travel industry. But I really see that being the play here, just simply based on the fact that travel is getting back in full steam. People want to go places. We've been locked up for a year and a half now. So people want to get out. Countries are starting to open back up. So that's my take on that. And then, like I said, the XLF, I'm not trading anything in the bank sectors, but they do have earnings coming up, and you can see how they bounced off of this right here and headed back to break over this. So that's definitely something to look out for if you want to play a run on banks towards earnings. I don't do earnings and I don't really trade banks, but it's just an observation. I'm not even saying that this is a great entry. It's just an observation, something to watch so we can understand what happens to banks around earnings, because that's essentially what we need to start doing too, is really mapping out what happens around earnings so you can understand what's going to happen to these stocks. Because if banks earnings are coming up and we see that on earnings, you get, I guess, a little bit of a fizzle out, but then you can look back, okay, well, this fell after earnings. Well, I don't want to trade that, but also it ran up towards earnings. So that could be what you see towards earning. And then people are like, all right, earnings is coming out, I'm out, right? So historically, you definitely want to be looking for this type of data, specifically more around the date too. So technically, this would be the earnings coming up. So you can see that it has that where you hit long-term and you do a pop in a day, and then it runs up towards earning. And then as soon as we get closer, it runs on back down. But maybe after earnings, you get a run back up, right? And then based on what we see here, maybe that could be the after of financials. So maybe they give some of this back going into earnings, and then after earnings, they break back over that. So I don't know what's going to happen with these banks. I don't trade banks. I'm just more focused on travel right now because it's just cheap and they all fail. So that's where my eyes are focused now. But trade what you trade, most importantly. And definitely keep your eye out on screeners as well as ETFs so you can get a bigger picture of the market, and you're not just solely waiting on one stock to hit a low for you to enter, but you can actually watch them collectively. Cool. Well, that's it for today. I ain't gonna talk your head off anymore. I'm glad y'all sat here and just absorbed all of this. I'm gonna go ahead and stop this recording.